Welcome everybody today. It's a bit over 2, so we're going to start. Today is the first of the IACBAM webinar series with Jon Carruthers-Green. I will, of course, introduce him to you in a few minutes. Before I do that, I would like to explain you a little bit about the International Association. The association promotes, develops, and maintains, first of all, CBAM stakeholder certifications. We serve on top of that as a knowledge hub, and we do, for example, industry talks, organize summits. And altogether, we do that to share knowledge about CBAM amongst the CBAM community. I'll give you a few examples, like, for example, this webinar series, how we do that. First of all, by research. Personally, I find this a very interesting research, which actually dives into the effect of installations decarbonizing versus countries that install their own CBAM system, and then eventually what the effects are on the price, what the importer has to pay. Next to that, we offer certification. And this is a picture of a few months ago where a lot of trainers were certified by the International Association. There are 4 certifications available. The first one is for software platforms. The second one is for companies. That means that you certify the processes within your organization, because what we see is that within CBAM, a lot of mistakes happen. And once you structure your company in such a way, once you implement the right processes, you can improve CBAM for your organization and limit the risks that the company is exposed to much more than if you would not look into that. On top of that, we have IACBAM 3003 2025. That is a certification for the trainers. Trainers come to IACBAM, they are being trained on the standards. And it's actually those trainers that can certify both the companies as well professionals. Because that's 3004 CBAM fundamentals. CBAM fundamentals is provided by the trainers. And that makes that the individual will reach a certain level of understanding of CBAM. And actually, that's currently the most popular one. Every month, we receive trainers here at IACBAM. We train them, and they go out and in their countries train companies on 3002 and individuals on 3004. Currently, we get more and more members that are interested in joining IACBAM. I would like to invite you to take a look at our website to see what other activities we organize. One of them is the Global CBAM Summit, which will take place on the 28th of May in Prague. There are still some invitations pending for speakers, but currently I can already announce that the event will be moderated by Benjamin Steven. We will have Michael Lund, Group CEO of Damstal, Francesca from SGS, Jan Joost and Brinker, as well Nick Ogilvie from Carbon Chain. It's going to be a very interesting summit where we actually ask our speakers to take their company hat off and share information and knowledge to see how we can move CBAM forward. We're not pro or against during this event, because you'll notice that we bring a lot of people together, from importers, suppliers, consultants. We want to have an open discussion how we could improve CBAM. And usually how it works, if you want to improve something, it is that information is connected with knowledge. That's simply how it works. And that creates an insight. And an insight can turn into an idea. And an idea, in theory, could result in a competitive advantage or a dynamic capability. And those small sparks, they happen more often when you bring people together with all a unique piece of knowledge of a subject. And in this case, that subject is CBAM. And that is what we would like to achieve at this summit. I believe it's going to be a very, very interesting event. Now, apart from summits, apart from certification, apart from research, we also will host a monthly webinar. And the first speaker of this webinar is Jon. Jon, would you mind to turn on your camera and microphone? Hello.
Hello.
There. Hello, hello. Nice to see you. I will actually just give you a formal introduction because You deserve that. Jon is a Steel Market Analyst of MEPS International, and your recent focus has been on trade defense measures, and of course, part of that is both the EU and the UK CBAM. And well, we spoke, I think the first time almost a year ago. I was impressed by the knowledge you have on the steel prices, on everything what's happening in the world, and I really enjoy to listen to you. We have done a webinar almost a year ago, I think, and I'm very happy that you joined this webinar series to inform the members and also non-members of IACBAM.
Yeah, IACBAM is a fantastic organisation, and I've got to say, where the European Commission has led us down with information, with guidance, it seems that you're stepping up to fill that gap. So I'm very pleased to be here and be involved with these webinars.
Thank you.
So let me just start by sharing my screen. Okay, I hope you can see there just a little introduction to MEPS as a company. And just on top of the introduction from Marcel, I just want to explain in a bit more detail why I've got interested in CBAM and what we believe that it's going to be doing affecting the steel market going forward. So for anybody out there who doesn't know or hasn't heard of MEPS International before, we are a global steel price analysis company. We are an independent company that has no links with any mills, any traders, and what we see our role in the market as is to, within our research team, to collect the latest prices that are being sent back and forth between buyers and sellers. We try and compile that information into price series, which we then sell on to our customers. And for those who need more information or further guidance, we also sell on some publications which go into a lot more detail about market activity, and then there's also some forecasts that we produce as well. So just a little bit of my background when I get to move this forward.
Usually you just have to click on the presentation you're sharing, so not in the screen, but in your PowerPoint actually.
Okay.
Yeah, there you go.
There we go. Okay, so that's me. I'm Jon Carruthers-Green, and I've been involved at MEPS International for around about 13 years now. And as Marcel said, my focus has really been at the analysis side of our company. So where we have a team of researchers that are getting the information from the sort of the frontline buyers and sellers, that information comes to our analysis team, and we try and put that information together in order to provide clear indications of where the market's going. My focus within that has always been looking at steel production, steel trade. Steel trade defense measures was really the new thing a few years ago. And so that naturally developed into an interest around the steel safeguards and around CBAM. So what I'd like to do today is just explain some of the latest developments that we've seen that have happened in the past month or two. We've recently gone from the preliminary period of CBAM to the definitive period. And with that starting on January the 1st, 2026, of course, the European Commission decided to wait until just 2 weeks before then to release around about 25 documents, around about 2,500 pages, full of numbers, full of information that is necessary to understand exactly what kind of charges you'll be facing when importing iron and steel products into the EU. So I'm just going to very briefly go through this information that we saw in December. And I really want to focus on two parts of it. There's the two knowns that are on there. There's the free allowances, or European benchmarks, as they're also known, and then the country-specific default values. What we also got there during this December release was a little bit more information on how the EU ETS price is going to be incorporated into CBAM. So I'm just going to focus on that in a little bit more detail as well. Then the big question that we get from a lot of people is, what's my CBAM charge? How much is CBAM going to cost me? So I just want to run through a few examples of potential costs for various steel imports. Then we're going to also just have a quick look at the difference between using the default values and also potentially using any actually verified emissions. And then finally, I just want to focus more on European steel prices. So we're going to have a little look at the numbers that our forecast team are suggesting will be the course for 2026. So just a quick recap before we start. And a lot of this information came from a very backslapping press release that the European Commission put out just a few weeks ago. They were very pleased to tell everyone that the CBAM definitive period started on January the 1st, and within that first week, around about 1.6 million tonnes of CBAM goods were brought into the European Union. Of that, around about 98% of the total tonnage was iron and steel products. That's why it's such a big focus for us at MEPS International at the moment. What they also confirmed was that around about 4,000 authorised declarants had been set up on their system in that either prior to the definitive period starting or in that first week. And that list there is essentially the people who are legally allowed to bring CBAM goods into the region. And they also mentioned some of the major countries that are being affected by this. Turkey, China, and India were, of course, at the top of the list. And from a steel point of view, this certainly makes sense, as they always feature in some of the highest numbers for steel exports into the EU. So let's just have a quick look at some of that information that was released in December. And some of it I'm going to focus on today, and some of it I'm going to leave to some of the other webinars in this series. As Marcel said, there's a whole team of people who are there to sort of help provide some guidance on CBAM. And I think leaving things like emissions methodologies, customs communications, and those kind of things, leaving it to those experts is a much better idea. So I really want to focus on what CBAM is going to do to prices, what it's going to do to import prices, what it's going to do to prices within Europe. So the key bits that really sort of cover that are going to be something called country-specific default values, free allocations, and then the certificate pricing. This was all included in that release. I'm going to touch very briefly on some of the other parts, the downstream goods expansion and the verification. But like I say, my primary focus is going to be looking at prices. So let's start and have a look at how we put the CBAM price, the CBAM liability, the CBAM cost together. Now, in the documentation released by the European Union, there are a whole series of very complicated looking formulas. I'm not a maths guy, and I really I've tried to break this down into a fairly simple way that most people can understand this. So very briefly, the CBAM calculation, the CBAM liability, the amount you will have to pay for each ton of steel or another product brought into Europe is based on this formula. Now, these first two blocks on the left-hand side really answer the question of how many certificates, how many CBAM certificates do I need? And CBAM certificates, as we'll find out in a little bit, are essentially sort of the currency of CBAM. The next part of that, the carbon price, will really affect just how much these certificates cost. And then also, another major part of this equation is looking at third country carbon costs. That's another factor that the Commission wants us to include within these calculations. So let's just break this down into a little bit more detail. let's start with these supplier emissions. This is the starting point of any calculation. Importers will now have a duty to declare the CO2 content embedded in any material that they bring into the EU. Essentially, to calculate these supplier emissions, importers have two methods available to them. One of them is fairly simple, and the other one is a little bit more complicated. The downside of the simple option is that we're expecting costs to be particularly high. So this simple version is the country-specific default values, which were included in the data release in December. Now, what the Commission has done is they released an absolutely giant document, around about 1,600 pages, which essentially assigned a default value for each steel product.
Jon, may I mention one thing? I see that
Sure.
people actually have questions. What we can do, if you're okay with that, is that people can navigate to the right bottom corner, and there they can ask questions, and then we answer them after the webinar. Would that be okay for you?
That would be absolutely fine. If we've got some time at the end, then I'll be happy to run through some questions then. If
Perfect.
not, I'll be happy to follow up afterwards.
Yeah, and to the viewers, I want to ask if it's about a specific piece on the slide, please put that also in the question so we know where to navigate with respect to the question. Thanks. Yeah, perfect.
Thank you. The country-specific default values. This is, as I say, this is one option that you can take when it comes to use it to account for your supplier's emissions. And these default values essentially give a CO2 emissions per ton of good value for each one of the products that's in the CBAM scheme. So anybody who's had the pleasure of reading through these documents know that there's around about 200 different HS codes covered within the iron and steel section. And each country is given one of these default values. And that default value is based on the average emission intensity of that particular country as assessed by the European Commission. There's also a bit of a markup. Using these values is intended to be slightly punitive. The intention here is these values are high enough that you are incentivized then to go and get actual emissions data. So in 2026, each one of these numbers is increased by 10%, and that goes up to 20% next year and 30% from 2028. Not every country, though, and every product has a specific default value set within this document. In that instance, there is also a separate table for other countries not specified. So if you can't find a particular value in a particular country, navigate towards that table. There are also there is also an additional table. If the country isn't not just specified but is unknown, then there are even higher default values that are to use there. The intention there, once again, is to incentivize the use of accurate data and ultimately to use actual emissions data. Within this document, though, what we've seen is that stamped on every page is some watermark text saying that these values are provisional. So I fully expect these to be revised as we go further through the CBAM scheme. There are certain countries in there who have quite questionable numbers, and I'll come on to some of those examples a little later. And I can certainly see that those ones in particular are likely to change. So the other option that you have, instead of using these default values, is to use actual emissions data. And this will be information that you'll have received from your supplier. And these can be used instead of the default values. There is a little bit of a problem trying to do this at the moment. First of all, these emissions must be verified. What does that mean? So this means that an officially accredited verification company must make a site visit to this plant within the first year that you wish to use these emissions values. This is going to create a little bit of a bottleneck. What we're not expecting is this list of accredited companies to be released until at least July 2026. Now, for any CBAM calculation, any CBAM liability in 2026, that doesn't have to be paid until we get to September 27. But there is going to be this period, this bottleneck, where there is going to be a rush of companies, a rush of steel mills that will be getting a lot of pressure from their customers to get verified. And this is because the natural assumption is that the actual emissions data is going to be lower than the default values set by the Commission. So let's move on to the next section within the calculation, and that's the free allocation. I've also heard these known as the European benchmarks. There's a lot of confusing language within CBAM, but I'm going to try and stick to free allocation where I can. Like I say, you may see the odd European benchmark in my slides when I haven't quite caught it properly. What is the free allocation? This is essentially the baseline for any for your calculation when it comes to working out how many certificates you're going to need. The free allocation is based on a scheme that's been operating in Europe for many years now. Within Europe, ETS benchmarks have been set for, I think the latest one was 2020 to 2025, and there's some new numbers coming out for the 26 to 2030 period. But essentially what they do is they define the minimum CO2 that is expected to be embedded within a particular product category using the cleanest technology that's available. So these free allocations, the numbers that are used there, the numbers that were released in December, are all based on the 10% cleanest EU producers. Now, as the European steelmakers have an obligation to cut out their carbon emissions, these free allocations are going to be phased out over the next 8 to 10 years. In 2026, 2.5% of these free allocations are going to be removed. Next year, that number is going to be 5%. I think that goes to 10% in 2028, and then that number increases at a much steeper rate until we get to 2034. And once again, the free allocations are based on specific product categories. So steel that's made as a hot roll coil or a cold roll coil, for example, will receive a specific free allocation value. Just to complicate things a little bit further, because it's not already complicated enough, there are 3 different free allocation values for carbon steel. And that's all set depending on the production route of the steel made. So we've got one for the blast furnace, basic oxygen furnace route, we've got one for DRI, and then a final one for scrap. And each one of those is slightly lower than the other. For stainless steel, though, we've seen a slightly different scheme. The benchmarks there are managed on a slightly different manner. So there's one figure for 26 and 27, and there's another figure that's applicable for 28 through 2030. Now, there was no real explanation as to why this had happened, but speaking to my colleagues in the office that focus on stainless steels on a lot more detail, is that essentially all of the stainless steel within Europe is produced via electric arc furnace. So essentially you can consider stainless steel being some of the cleanest steel used at the moment. So the next thing that we need to look at is one of those still, I'm going to call them unknowns, and that's the EU carbon price. Now, this is the big multiplier, and this is probably one of the largest factors in determining just how much your CBAM cost, your CBAM liability is going to be. And what this essentially does is this determines just how much each one of the certificates is going to cost. So let's have a quick look at the Commission's plan for these prices this year. So for the CBAM scheme, you'll be purchasing one CBAM certificate to cover 1 tonne of CO2 emissions. Now, as we're going to see in a little while, for a tonne of steel, there may be several of these certificates that you'll need for each tonne. The price of these certificates, as I say, is all based on the EU ETS price. Now, this is the scheme which has been operating in Europe for several years now. We know it's here probably in the UK as carbon credits or cap and trade. This is the scheme that essentially puts a price on that CO2 emissions. The price can be a little bit difficult to assess. It has been quite volatile. In March 2023, we saw it peaking at over €100. Then, as we moved into the start of this year, it dropped quite significantly down to 60. What we have seen since then is it climbing very steadily throughout the end of 2025. And then right at the end of 25 and at the beginning of January, when we got a lot of these CBAM announcements, there was a big spike just after the European Commission announcements detailing just how many certificates may be needed. And since then, we've seen it fluctuate quite a lot throughout January. So I think a lot of this is due to the natural worry that there is in the market for people who are looking to purchase CBAM certificates. But then also, I think there's this market speculation as well. We've seen a lot of hedge funds move to purchase CBAM certificates, essentially believing that the price of these is going to increase as demand for the CBAM certificates also increases. So the way that it's actually going to be implemented in 2026 is going to be on a quarterly basis. So any steel products or any other CBAM products brought into Europe from January 1st to March 31st will be assessed at the quarterly average price for the first quarter. So essentially, we don't know exactly where that's going to be. Like I say, I've been tracking this fairly closely over the past week or two, and the current average for this first month has come in at around about €89. And I'm pointing this out now because this is the figure I'll be referring to a little bit later on when we run through some examples. But as I say, when we get to April, that quarterly average may have changed, maybe slightly lower, maybe slightly higher. One thing that I would say, though, is a lot of the forecasts that I have seen suggest that the ETS price is just going to increase. I've seen some forecasts suggesting it's going to be over €120 within the next few years. Given the movement that we've seen this year, that wouldn't surprise me at all. So essentially, what this means is each one of those certificates that you'll need to purchase is going to increase in price. So the next thing we need to look at is if there's any discounts available. What the Commission has said repeatedly is that this isn't a tax-raising scheme. This isn't there to raise revenue necessarily for the Commission. So what they've said is that if CO2 is being paid for elsewhere in the supply chain, then they will negate that from any CBAM liabilities that you would have to pay. Essentially what they've said is they don't want to double tax these carbon emissions. Once again, As with everything with CBAM, there are a few added complications. Very few countries actually have equivalent carbon cost schemes up and running. So essentially for these countries, if you're importing from these countries, the amount that you'll be taking off is going to be zero. To make it a little bit more complicated, many of these countries that do have some kind of carbon trading scheme or ETS scheme, they're at a different stage of development. So in China and South Korea, we see that their ETS schemes cover their energy markets and don't cover industrial producers like steel producers. So there's still a question as to exactly how their emissions will be dealt with. There are also countries like the UK, which essentially inherited its carbon pricing scheme when we left the European Union. So the scheme here in the UK is a little bit more developed than in many other places. Same goes for Norway and some of the other EEA countries. Essentially, what the European Commission has said they're going to do is they're going to provide further guidance on this in 2026. So once again, we've seen that the game has started without the rules being fully clarified. But I think it just goes to show how CBAM is going to be an ongoing, evolving scheme, and we are really right at the start of it. So just moving on a little further, let's just put that all together and just have a little recap of where we are. So we look at the supplier emissions, we take away any free allocations, and that tells you how many certificates you need. We then look at the carbon price within the EU to find out just how much each one of those certificates will cost. And then we have a look to see whether any of this CO2 is being paid for elsewhere. And that gives us our CBAM liability. So just to recap, this liability is supposed to cover the entire carbon embedded within CBAM goods as they're imported into the EU border. I say CBAM goods because iron and steel is currently one of those. But the Commission has also set out a proposal for extending CBAM to more products. I'll go into that in a little bit more detail later on though. What's also going to happen with this CBAM liability is the default values, if you're using those, they're going to increase each year, and the free allowance is going to decrease each year as ETS allowances are phased out for European steelmakers. The way it gets put into practice, though, we're going to see CBAM liabilities, CBAM costs vary significantly by production route, energy mix, and country of origin. So one of the things that we have been asked repeatedly by our customers is, what's the cost of CBAM? It's a very easy question to ask, but it's a very difficult question to answer. So what I want to do next is just have a look at a few examples of just how much it might cost. So I'm going to start with non-alloy and other alloy hot rolled sheets and strips, more commonly known within the industry as hot rolled coil. And the reason I'm starting with this particular product is this is the largest single steel category for import tonnage into the EU. So what I've got here on this table here is just a list of the top 5 exporters of hot rolled coil into the EU, and just rank this table by order from the largest to the smallest. There's just a few other things I just want to point out about this table. There is the free allocation number that's on there. That figure on there also includes, does not include the CBAM factor. So that's that minus 2.5% that I briefly alluded to earlier. But the calculations here will include that. The same for these country-specific default values. The numbers I've got here do include the 10% uplift that we're going to see in 2026. And then the next point to note is that I've used that 89 euros price for each one of the certificates. So as you can see in this final column here, the CBAM liability, we're going to get a wide variation for potential CBAM costs if you're using these default values. If we look at hot rolled coil, if we look at this product category, it's currently trading in Europe at around about 625 euros for a ton of steel. So if you think we're then if you think that when then potentially adding another 300 tons, if it's being imported from India, then that really doesn't leave a whole lot of margin for anybody who is receiving material from India. Essentially, CBAM as it stands takes them off the board. Other countries that are on there have a much lower liability. As we will see in a little while, though, we're not expecting prices in Europe to jump by quite as much as some of these numbers here will suggest. But what this table is telling me is that certain countries, it will be a lot more difficult to source from successfully. The next one I'd like to show you is metallic coated sheets. Now, this is the next largest product category for imports into the EU. And a lot of this material goes into the automotive industry. It's also known as hot dip galvanized coil. Once again, we're seeing a wide variation for potential CBAM liabilities, from as little here as 80 euros right up to, once again, India receiving a rather high potential liability of 290 euros. I've just got a couple more categories that I want to mention. One of these is wire rod. And the reason for mentioning this one is because of some of the peculiarities of the way the CBAM pricing is going to work. So third on our list here, with an import tonnage of around about 280,000 tons in 2024, is Switzerland. And you can see there that I have put their liability there as 0. Essentially, with Switzerland being part of the ETS scheme already, their CBAM liability is essentially 0. The expectation here is that the cost for material imported from Switzerland is already going to be accounted for through that scheme. The other one of note here is Moldova. So when I was looking through some of these a little earlier, I couldn't actually find a value for wire rod for Moldova, sourced from Moldova. So as I said before, in this case, the methodology says that you use the other countries and territories not specified figure. And that comes out at around about 275 euros. And then the final one I'd like to show you of these examples is a stainless steel. So this is stainless cold rolled coil. And the reason for showing you this one, not just something for our stainless purchasing friends, but I think you can probably notice that there's one figure here that stands out like a sore thumb. That's Taiwan. So their country-specific default value, as assessed in the December release, was 9.55 tons of CO2 per ton of steel, which is an astronomical number. This is higher than figures we've seen in China, in Indonesia. This is actually higher than the number that would be assigned if you didn't know where you were purchasing steel from. So I've mentioned this on here as I think this is a good example of one of the numbers that I would expect to be revised when the commission gets to do that. So those are just some of the examples, and I think it just highlights some of the differences that that CBAM pricing is going to cause for the market. Our team of experts, though, have gone through the whole range of products. So if anybody is interested in any of the other categories that may be affected, or wants to look into these in more detail, please do reach out to me after the presentation. So with these default values potentially adding a really high cost, we need to sort of say what is actually happening in the market. And our research team have fed back to us that there's some various approaches that are being taken. Some of them involve sort of holding out and hoping, really. We've heard that some importers, some of our customers are really hoping that they'll either A, be able to pass on these CBAM costs in their entirety, or B, hoping that there'll be some kind of revision to these numbers. We've seen other companies, other importers, take a slightly sort of different tack with things. So one major mill within, one major re-roller within Southern Europe, our research team found out that they're getting essentially pre-verified emissions from their suppliers. Essentially what they're doing is they're taking the certificates, they're taking the emissions that are associated with the steel, the emissions there from the certificates that the steel mill have assessed themselves. And what they're doing is they're using those figures within their calculations. As I said before, there's probably going to be a little bit of risk with this because there is going to be a bit of a bottleneck. So while these mills can say that we're producing steel at a much lower level than these default values, somebody somewhere still has to verify that they can do that. And I think there's going to be a little bit of a race for time when it does actually come around to doing that. We've also seen other importers look to shift the Incoterms that they're using when they're purchasing steel. So a lot of them now are looking to push a lot of the legal responsibility onto their suppliers by changing to duty delivery paid terms. Now, I think this also comes with a lot of risk. We've seen importers try this, but one of the things I would recommend highly is looking through the fine print of these contracts. With CBAM being a brand new scheme, with these costs not really being applied anywhere else in the world previously, I would go through any contracts that you're looking to use on these terms line by line, because this duty is essentially not paid on the material that's imported, it's paid on the carbon associated with that material. And then that cost is shifted until 2027. So if that's a method that you do intend on using, I check, like I say, the fine print of those contracts. We've also seen some suppliers suggest that what they'll do is they'll send lower emission steel to Europe and continue to produce higher emission steel, but try and sell that elsewhere. This was one of the concerns that the Commission knows about and understands, and I don't think it's really something that can be avoided. Some other people have been telling us that they're also already looking at realigning supply chains to countries with lower specific default values. Now, I think this is really it's more the traders, I think, that are taking this approach. But with these extra costs being added, then it may be something that can be done. The other point I just like to make is that a lot of importers, a lot of companies still seem very confused by CBAM. And I think that's quite understandable. And it's also another reason why we want to get involved with the IACBAM scheme, just to sort of share the knowledge that we have. So, I said I'd very briefly mention it, the expansion to downstream goods. This was a proposal that was included within the documents shared in December. And the reason for mentioning this is because the vast majority of these products here are iron and steel derivative products. So while CBAM is almost entirely an iron and steel scheme, even with an expansion of products, we expect it to continue to primarily focus on the iron and steel industry. As I say, though, this is a proposal that's been put out by the European Commission. and we're not expecting any of these categories to be brought in by 2028 at the earliest. So just going back to the points about how this is going to affect prices in Europe, our forecast team put together our expectations for prices every month, and that's something that's available to our customers. And what I'd just like to share now is that towards the back end of 2025, we started to see an increase in prices, particularly in hot rolled coil. So that's one of the lines I've selected for this chart, as it's a very good example of a flat rolled steel product. We've also got rebar on there for long steel. We saw that there was a push to increase prices as the threat of CBAM started. What we've also heard reports of is that, as well as looking to increase prices, European mills are looking to increase output. They're looking to regain some market share. There's already some data to suggest that in the past month or two, this has already happened. So while some of these headline CBAM figures can be quite alarming, we're not expecting that to fully feed through to the cost of steel in Europe. Part of the problem is the overall lack of demand. We're going to see a little bit of a recovery, but we're not expecting a major recovery. I don't think that 2026 is going to be a turnaround year. So let's just move on to have a quick look at the forecasts that we've got. So we're expecting prices to increase steadily through this first quarter. Our forecast team already suggested we're going to see big price increases this month, which has happened, and we're expecting to see further price increases. Once again, because the CBAM costs don't actually realise until 2027, a lot of this is due to the uncertainty that CBAM's bringing along. If you're hearing that there's a potential cost of hundreds of euros, then it's going to put you off purchasing from certain countries. So it's really sort of that CBAM confusion that's causing a lot of importers to really sort of reduce the volumes they're bringing into Europe, and that's really sort of the main driver for these price increases through the first half of 2026. You can also see in the second half there that we're expecting prices to sort of peak and also to sort of come down as we get further through 2026. And that's because, as I say, we're not expecting a huge recovery in demand this year. If that were to change, then our forecast would be revised upwards. But everything that we're seeing sort of in the economic news at the moment, the economic forecasts that we're seeing suggest that really isn't going to happen. Another positive, well, for steel prices at least, is that the European Commission intends to revise and tighten their European Steel Safeguard Scheme from July. There's been no announcement around that yet, but if that does come in and this is tightened more than they've currently signalled, we may see further increases to these prices. So that's pretty much everything I wanted to run through. I just want to go through a couple of key points that if you take away anything, this is what you take away. CBAM, the costs, they're finally here. However, these costs won't be paid until 2027. The information that we've seen, the analysis that we can do now is all based on these default values. And essentially what they do is provide a worst case scenario. Actual emissions, if they can be verified in time, should reduce your CBAM liability, though there's going to be challenges getting those. And really, at the moment, it's the confusion around CBAM that's caused import volumes to drop. However, even whether it's confusion or actual price changes or the potential for future prices, this has reduced import volumes, and this has helped steelmakers put up prices. And we expect that to continue through at least through the first half of 2026. So I just want to say thank you very much for listening to me today. I want to say thank you very much to the IACBAM team. If you have any further questions, any follow-up you'd like, then please either get in touch with me or get in touch with them. Thank you.
Thank you, Jon. Very nice. That is very interesting. I can imagine that if I would be into steel, I would like to actually have a one-on-one with you to dive deeper into the troubles I would have.
Click on that QR code and we'll arrange something.
Sounds good. Very nice. We have quite some questions.
Okay.
So let's get over them one by one. I see Aaron actually raising his hand, but I really would like to ask you to put the questions in the Q&A. First question is, and we can actually do the Q&A together. The first question actually is, who will pay for the verification? And who will decide which plant to verify? And then actually the third one, and we can answer maybe them in one row, how much time will the verification take?
All very interesting questions, and not really the area of my expertise. I'm hoping some of these future talks will cover that in more detail.
Okay. I can answer
please.
them actually if you want, because I see these questions being asked to the company I also work with on a daily basis. So who will pay for the verification? It's a tricky question, because actually what I believe is that the installation should pay. The reason is that the most progressive importers, they are sometimes willing to pay for the verification, especially if one of those suppliers, one of those installations are actually very important for the business. However, very often that installation is supplying steel to, let's say, 50 or 100 companies in the EU. So it wouldn't actually be fair if the importer pays the cost for the verification process, and then eventually all the other 49 or the other 99 would get that data for free. Eventually, that is also a commercial decision, of course. The thing is that verification is not even the biggest cost. The biggest cost is actually the decarbonisation, everything what comes with that, the consulting, etc. And who will decide which plant to verify? That is actually up to the verifiers. So all these big names we know as SGS, TUV, Bureau Veritas, LRQA, etc. I guess that they are the ones who decide who they're going to serve first. And there's not too much time in between 2026 and the moment you have to file the details to the importer, so they can shift to actual values instead of default values. So with many installations and not that much verifiers, I think that there will be a fight who they're going to serve. And then how much time will the verification take? It really depends on the installation, because big steel producers are taking, of course, much more time than just someone who turns a wire into a screw. What is important to mention, though, is that let's say you have like 3 installations. Let's say the steel manufacturer, the one who makes the wires, and the one who turns it into a screw. Then you can get the data from the steel mill, and you can get the data from the one who makes the screws. But the one in the middle, you need to, because the moment when you don't have actual data, it stops. So that would mean that even though you know them, you're not allowed to use the actual values you get from the steel mill. And often that's where 80 or 90% of the emissions are. That's my take on it, actually.
I suppose one thing I'd just like to add to that is, as I mentioned in the presentation, we've heard that many steel mills have already gone through some kind of assessment of their emissions. So I think it will also depend on how much of that information can be provided to any assessors, how much they'll take on board when it comes to performing the verification.
Yep. It's also interesting maybe to know that on the IACBAM summit, where SGS, for example, will present, we will deep dive into verification with many experts. We will also have a masterclass there. I think verification is going to be the main topic of this year, together with UK CBAM, of course. In connection with that, they ask how re-rollers would be able to verify their emissions. Because the tricky thing with re-rollers is that they get their materials from many suppliers. And as far as I know, is that if you use material you need to have the actual values and the verification report. If not, you will have to go for default values.
Yes, that's how I understand it as well. And then also, I suppose the other part comes in is if they've got the verified emissions, then that can be essentially the re-roller would be paying for sort of the difference between the two. But yes, once again, it really pushes everybody to getting this actual emission information.
Yeah. And then the question connected to that is pre-verification of CBAM calculations an acceptable approach for now, till the accredited verifiers list is released by EC?
So I think this is an area where you are taking on an element of risk. But just using the default values, you're taking on potentially an even bigger risk. I think it's worthwhile, certainly considering the information that any mills or any suppliers have given to you already. There is this period, going to be around about 12 months, where this verification can take place. So it's at that point, it's where it's going to be that race in time.
Yeah, exactly. So from Q3, right, September till the next year, September, when you have to file, you report the latest, and there you have to show actual values. What I see is that pre-verification tells you that the factory is very serious about what they're doing. So just having a monitoring plan, just having everything in place, monitoring the emissions, so you have it at the end of the year already, is like a big check mark that you can see that the company where you would like to see the data from is doing the right thing. But you never know if they really get the actual emissions. And that's very tricky currently for importers, because I talk with importers that have to add or a 70 euro or a 700 euros to their, let's say 900 euros a ton import of cruise. So they would almost have to double their cost. The problem is that by now they still don't know if eventually that company is going to provide them the actual emissions, so they can go for the 70. The issue is, though, that a lot of companies in the EU, they don't know yet exactly how CBAM works, and they are just still providing the products without this markup. And those companies face the issue that if they keep on providing products without the CBAM markup, then next year, if they would have to suddenly pay 700 euros per ton that they imported because they end up not receiving the actual values, it's a big issue. I find that kind of unhealthy for the market, because actually what they should do is they should add, like, let's say, to their 900 euros a ton, a 700 euros, and let's say sell it for 1600. But the moment when your competitor is not realizing yet that there should be a CBAM surcharge, it's very hard to sell something for 1600 euros if the other one sells it for 700. And that's what we see currently in the market happening. Is that also with steel happening, Jon, or is it different?
It's also very interesting at the moment. So some of the mills that are offering this information, this pre-verification, like you say, they're sort of very advanced. They've got great relationships with their customers, and a lot of the emissions that they're suggesting their mills are actually pretty much at or below the free allowance for Europe. So it's going to become very, very important. It's going to be, like I say, that race in time later on this year to try and get those done. Yeah.
Then the question, I can answer it if you want, but if EU origin materials come through the UK and on into Ireland or Europe, it says, which is kind of, Ireland is part of Europe, at least the European, the European part, EU at least, sorry. Will there be any CBAM implications?
So that's a very interesting one. I suppose it depends if you're saying coming through Europe, where's it coming? Coming through the UK, where's it coming from? If it's coming through Europe already, then any emissions that's sort of produced in Europe will be accounted for through the ETS scheme. If it's coming into the UK from a third country, then yes, there will be that CBAM liability, especially as it sort of crosses the border into Ireland. I'm not going to comment on Northern Ireland just yet.
That's a hard one. Huh?
I don't think everything's been quite worked out yet. That's probably the tricky part. Even though Northern Ireland is still part of the UK, there are implications there.
Exactly, and it's important to mention that if we can consider them return goods, then they actually, because of the ETS, they have like zero financial liability, but you still have to report it. That's important. Then there was a question about cement, and if I remember well, the question is if indirect emissions have to be accounted for? And the answer is actually yes. And that's the case with steel. It's not the case, but with cement, for example, hydrogen, most likely fertilizers, indirect has to be reported, and we have to pay over that. Yeah. Let me see. Clinker cement, that one. Yeah. Well, can you please walk me through how to calculate complex goods using the country-specific default values? I think that's a little bit too complex question for now. That's really something what you.
I think that's one to follow up. Yeah, a little bit later.
Exactly.
Perhaps if you could send me their details, I'll get in touch.
Perfect. That's good. And then, do you think the UK will be added in 2027 to the zero emission list, like Swiss, Norway, etc.?
Yeah, great question. So currently, the UK government and the EU government are in talks about how to realign the EU ETS scheme. Now, there's several different sort of complications which are holding this up. One of them being the fact that the price of a ton of carbon in the UK has dropped quite considerably compared to the price in Europe. Essentially, until these negotiations are concluded, you've got to consider the UK as being outside of it. But then remember, in 2027, the UK starts its own CBAM scheme. That, from everything that we've heard, is going to be a little bit simpler to implement. There won't be any purchasing of certificates. There'll simply be sort of a tax liability depending on the emissions based on the imports. But really, very short answer, it's a little too early to tell, but we should find out very soon.
Yeah, and the question is CBAM likely to change global trade?
I think let's break that into 2 points. I think that's certainly the intention from the European Commission, that we change global trade to the point where there is a global carbon price. I think that's really one of their ultimate ambitions, the top of the wish list. What I think is more likely to happen, and certainly is going to happen more in the short term, is we're going to see companies reacting purely on cost. And they're going to start looking to these suppliers who can provide this actual information, who can prove that their emissions are lower. So long as they're not in any contracts, then they'll be quite happy to skip from one company to another. And with it being sort of country-based, these default values, I'm sure people are already pouring through this list to try and find countries with low emissions. Just one more thing to add to that, though, is we're expecting the EU steel safeguards to be revised in July. Now, this adds another tax, another burden on imports of steel into Europe. We're expecting a new list of country-specific quotas to be released with different quota volumes, and then a higher tariff once we go over them. So there's going to be people pouring over both of these lists in the short term. Yeah,
right. And what I would like to add to that is that I see changes in countries, but I also see changes in importers. They are really looking into, okay, so maybe if I would change country, suddenly the default values are lower, and I will actually be much cheaper. And I literally see that my clients actually changing. They're really changing their suppliers, and a massive part is considering it. The second thing is that also countries are realizing that. I was, for example, in a few countries in the Balkans at an event, and yeah, it's on tape, so it's not. The minister said on the podium, like, actually, we would like to have money to be able to transform into a CBAM mechanism. It felt like they were a little bit against, but I guess in the meantime they realized that if you have your own CBAM system, you can pay the cost in your own country instead of paying the taxes in the EU, and then you end up in a situation to keep that yourself. So 4 months later, the country suddenly started their own CBAM mechanism. Now, why is that good? Because you can imagine if in that country they produce a lot of product with coal, and they wouldn't transform, then first of all, it's going to be impossible to sell in a few years into the EU market. But second, let's say a company like Turkey, those producers which have high emissions in their production, they will start to look for other markets, and they will start to dump their products in those countries who do not have a CBAM mechanism yet. that means that you're going to have an issue that you can't sell your products and you're going to have massive competition. And this kind of, I would almost say, effect we start to see happening in other countries. So it could be that if in 10, 20 years we look back, all the countries have an emission trading system. It's all integrated with each other. And the one who's producing the cleanest eventually has the biggest advantage, even though they maybe are a little bit more expensive because their machinery and their installations are more expensive, they are more competitive in other countries. And the later you adopt your country strategy on CBAM, the harder it will be to play this game. And that's what I see happening. So yes, when we now look into CBAM, it's not perfect, right? A lot of companies have big troubles with it. But I think that it could be that if we look back in 10 years, it's completely turned around. And that's, I think, also where, yeah, anyway, that's it. Let's not add anything to that. How will CBAM affect selling prices of tool steel? You have to help me. Do you know, Jon, what is tool steel?
Tool steel, yeah, it's not something that we track directly. So any specific numbers, I wouldn't be able to offer you. But once again, we're expecting CBAM really to restrict supply. We're expecting it to cut off those import offers, basically because of the uncertainty, basically because of the who knows how much it's going to cost me extra in 2027. So my first reaction is going to be that prices are going to increase. And if it follows the trends for the other sort of commodity grades that we track in more detail, then that's going to be sort of a progressive increase through the first half of the year.
Okay, thanks. And then, do you still have 5 minutes, Jon?
Sure.
Actually, yeah. Okay. The benchmarks? People ask if they're temporarily and when the new ones will be released.
I don't think there's any specific set dates, but as with everything else with CBAM, I'd expect this to be revised. We're essentially at the start of the scheme, start of the system, and it's a brand new, first of its kind around the world scheme.
Yeah.
It is going to take some time to get everything right. I believe there is going to be some revision to these benchmarks at some point this year. Something at the back of my mind's going there.
I heard early 2026, if I remember well.
Okay. Yeah.
And that has to do with the fact that it's based on the ETS. And I think they take, if I remember well, what was it, 2020 to 2025, and they were probably not ready yet with that. So I guess in the upcoming months, exactly what you say, but when exactly? I don't know.
No, it just gets announced. It just happens.
Yeah, indeed. We have to wrap up soon, but let's see if there are some other questions I can do. What is the logic behind the huge default values of countries such as India or Indonesia?
Okay. The logic behind those is that they are an average of the countries' emissions for those product categories. Where the European Commission got this data from, I'm not 100% sure, but they've said that they're following that methodology for each country. And I suppose it just once again, I'd expect some of these to be revised downwards. That Taiwanese stainless steel figure, for example, was incredibly high. Some of these emissions values probably won't get changed so much, and it'll be all based on the energy mix that goes into the steel that's produced there. So countries that produce with a high proportion of blast furnaces, we're expecting those numbers to stay high. Once again, they may get revised in a little bit, but we still expect them to be higher than, say, somewhere like Turkey, for example, which has a much more prevalence of electric arc furnaces.
Yeah. Let's. We have to wrap it up, Jon. It's interesting, but we're over time. May I ask? I'm sharing my screen again. Can you see it? I guess so. Huh?
Yes.
Yeah. So first of all, Jon, I would like to thank you very much for this webinar. It's really interesting. We will share it on our LinkedIn, and we will email all the participants, and actually, I think over 300 people that subscribed we will send them the link so they can rewatch the webinar. I just want to mention the next web speakers on the webinar series are going to be Nick Ogilvie on carbon chain. He will speak about the CBAM actual values, preparing compliant data and obtaining verification. As well, Holly Piggott, you can already put the dates in your agenda if you want, the 3rd of March as well, the 9th of April. Last but not least, I want to show once more the Global CBAM Summit on the 28th of May on the Thursday in Prague. It's going to be a very interesting special day with focus on UK CBAM verification, and a lot of people from the CBAM field will be there. And of course, Jon, I hope to see you over there in Prague.
Yes, I hope to attend as well. I just need to get that authorized by my boss first.
I understand. Then I leave how to say in English, the last words up to you to close.
Right. I just really want to say thank you very much to Marcel, not just for organising this webinar, but also to setting up the whole IACBAM Foundation. Where the confusion has been left, Marcel sort of stepped up and tried to really help with answering some of those points. And then also, finally, thank you very much for spending your time this afternoon learning about this. If you do have any other follow-up questions that weren't addressed here, the slides will be sent out, and you'll be able to contact me on there. All my details will be there. Thank you very much.
Thank you, Jon. Marvelous. And all, have a great day.